So today is December 13th, right in the close to the start of the holidays. And December 13th, important factor today, 2 o'clock FOMC meeting is going to be very important. One important area I wanted to focus was what's happening is the indexes have gone up quite a bit. So for anybody who is on their existing 401k money in the indexes, it is something that you should be looking to do some type of where the market is heading. An important factor if you on the underlying. So right now we are in an area territory where the interest rates have just come, the inflation has just come down. And see, last time I saw when already the inflation was at the top, Fed came later. And this time again, when there is enough uh, uh, damages have been done in the economy right now, where um, the small cap has gone is almost 70% down. Okay. And then the large cap, couple of large caps have taken the market up. So there's a disconnect, and market is always will always try to close the gap. The same gap we had like a year and a half when the COVID had hit. There was like, people were living their lives, but then the stock market had collapsed almost 40 to 50%. So for that reason, an understanding of the market, and what they did was they tried to meet the end. So for that reason, oil was spiking up like anything all the way for last 2022 and half of 2023, where there was no so understanding point of view, what has happened is, and the large caps have blown through the roof and the small caps have gone through so much down. And that's where we are looking for some level of correction and coming back together. And this may be coming in a way that there is the indexes getting more normalized, or it will go up further. But for that reason, the small caps have to come up, and how the money flow happens, and that is going to be the key. A lot of money is deadlocked in real estate because people were expecting real estate will go up. So there's money in real estate, money in the treasury now, and that's probably will be coming out very soon. So and then there's money in the cash accounts. So for all the reasons, it is important to understand how the money flow will happen for next 12 months, and where the opportunity is, and where is the time to take some risk off. Okay, so that's important. So Fed's decision today, I don't think will have any major impact, but it it is something which I want to understand. If Fed is going to reduce rates fast, then there'll be some type of situation where why they are doing it. So something is not right. So and if it's like we'll be dovish again, like mid of next year and later, in that case, again, we have to understand that this could be that we are not there yet. But looking like, I think 3.1% CPI versus 3% expected, it is very close to what Fed was looking at. So it's like 2% was they're looking, 3% right now. There's no reason that they should not be looking to reduce the rates. And if they go it fast enough, that means what's going on. Okay. Important factor on the international market, the China economy is going through a deep recession. China and US and are going to be interrelated. Already the oil has come down today to below $70. So that's an important mover I always like to talk about. So today, VIX, the futures have gone up. Russell is down. VIX is up a little bit. And let's see okay, so for, yeah, so overall, I'm still looking for the chart for the market. Give me 1 second here. Okay, here, yeah. So crude oil, important. Crude oil went. That's one area. It's giving me a indication that it's probably market is looking to have like a lower. So I think 3%, 2%. It could be even negative. So I'm will not be surprised if the inflation reaches to 1% and lower. So if it goes 0% minus 1%, all of that is possible, and that's where we enter into recession mode, because the cost of your commodity start to reduce, and that's why people will be holding back actually from their investment. So it's not good overall, but again, this is we have not seen recession ever in US market, I think, for a very long time, in case of except we have recessionary trends in real estate back in 2008. So that was, but not from the overall economy standpoint. So let's see. Right now we are watching, and today's Fed Powell comments at 2 o'clock will be important. Market will be jitterish after that. We'll see. Okay, from S&P point of view, we are trading water almost at the top. We are at the top, already crossed 5-year is the last highest 460, 4667, and we are almost 4653. So this is, we are like, at the top. If it goes up further, that means we are in the bullish market, and where that money is coming from, we don't know. Is it like a short supply of money and the prices have gone up too far, too quick because of less participation from the overall market? And if it is so, then how that will happen? How that will trade? Lot of money is in the option market. Real volume have reduced. GDP guidelines, again, we will be looking at as well for how the GDP will be looking for 12 months. So again, US economy is representative, or the stock market is representative of GDP as such. Okay, so how the GDP of US will be going across for okay, so that's, again, we have to take a look. Okay, so we will, for now, we will coming back to, from the earnings, we are coming back to the stocks. So today, let's see, the stock we were talking is, quickly we'll take a look. So AUR. Okay. So looks like, yeah, this stock is right now, we have, so their quarterly statements are negative. What this, let's see what the company is. It's Aurora Innovation. It does business. It's Aurora self-driving vehicle technology based on Pittsburgh, Pennsylvania. Okay, so that's your hometown. That's your place you live, right? Yeah. So both.
Right.
Okay, so definitely that is one area. And okay, there's been the market so listed for $9. Yeah, I see some upside trends. All I'm looking is this company has to become profitable, and that's where I am actually holding on some of my positions, where I am waiting for those companies to become profitable and show profitability here. So the balance sheet is there. Good part is their liabilities are lower and their asset base is increasing. So I like that. Another thing I like it is their top line is not bad, and there has been some, maybe they're expanding, their cash flow is lower, and that explains the undervaluation of the company stock prices as of now. And yeah, so all of that said, and there suddenly they have got good amount of cash, so I would be buyer. Yeah, this is a stock to be positive. I mean, I'll be definitely looking to increase my position in this company. Their market cap is $4 billion. Nice. Price point is 2.90. only thing I need to understand is, let's say, from the technical standpoint, where we are. Okay, so weekly performance being better, half-yearly performance is also okay, good. Their short float is low. Return of this is I'll ignore for the time being. Yeah, I think okay, now their earning performance. Last earning was decent, just small down, and then it was going up. So there is some level of resistance that they were happening. They were going through, and then what happened was the moment they crossed their trend line resistance this time and went down, and this was mid cycle. So September, all the way September to November, they almost hit their lowest, and close to this earning, I see positive. And this is the reason. See, the type of cash flow improvement that they got based on this, the stock should have gone up. But because of the pressure from the short sellers, the stock, it took some time for it to just cross and come back and go up, and then it's going sideways and then go up. So yes, pretty good move here. I'm positive, and yeah, definitely a good stock to enter further. Okay. Okay, I think we have one more. Ravi, are you there?
Yes, I'm there. Yeah. Hey, question on this AOR. What is the target you're expecting to hit, and what type of time frame?
So target, I'm expecting, let's see, because it's a niche company and we are, 1 second. $10 was IPO price. I mean, I generally, if the stock does its regular benchmark, and this was 2021, so before that, I would suggest if this stock has to go up, this is looking more than, yeah, this is higher, about 20, 30, 25. Once it gets in the profitability mode, which it looks like, it's getting a cash. So and all I'm looking is who are their suppliers, and where they are putting their money to work. Who are the partnerships? How the management is doing? Who is the management? So little bit more into the management aspect, and if this is towards the automation, then and they have the cash, then yes, definitely I'll be looking to for
Okay.
it have a more like the short float is low, so I'm not expecting a lot of squeeze to happen, but the organic growth will do its magic, and I'm expecting it to be above $10 over a period of 12 months at least.
And okay.
So yeah, I'll add it to my review further. I'll check it myself, but yeah, this is my thought process. Okay.
When is the next earnings call?
What?
When is the next earnings call for this company, Aurora?
Aurora will have its earning will be like, this was August, somewhere like start of August. So August 8 or 9, 10, and then this is November. So we will have it around Feb first week, Feb for first and second week. So
Okay.
yeah, it's going to if stock goes above $3.50 and
Yes.
further, then this stock is going to go up faster. And this is the exact gap I was talking about, where we have an economy where index is really high, but all the small businesses are going through tough time. So because of the higher interest rates, and also those ends have to meet at some point. So, yep.
Is this this is like this is the company that does auto driving for? Is this the right?
Yes, yes, it is.
So it's similar to Mobileye.
Yep, yeah, with Google partnership that they have. So this is similar. Yeah, so we'll explore this a little bit more, but definitely from current standpoint, this company is good to enter.
Okay.
Okay. Any other stock we want to go through today?
I've given you some. You want to look at HPQ? I got a few.
Sure, sure. HPQ.
Q, not HPE, HPQ. Yeah.
Yeah. So that's
And
it.
then, and then later, I think we should also look at desktop metal. I think that's our old position.
Sure, sure. So HPQ here. Okay. There's So it's a dividend stock, just press the dividend, and I like that our dividend did not, and the dividend amount is, let's see how much it's 0.26. So it's about 1% dividend close to.
Yeah. Yeah.
So for I see positive moves in this, and HP Intel. I think this company is the division of which takes care of the computers.
Yes.
Right. Okay. Yep. So all it comes to, let's say let's look at their top line, how they have performed. So the income statement have reduced, profitability has reduced. But for example, on the cash flow side, they were like negative to positive, so that's a good move, and that's where I'm getting interested here on the annual side. On a quarterly side, also I see some positivity. Balance sheet is they're high debt, but I think probably because of competition, how they want to win the competition with other. So as of now, this is growing, and personally, I feel HPQ will do good because of its turnaround story.
Mm-hmm.
Yeah, so for now, 32, it's as close to 32. So I say 27, 28, 26, I will look to enter. And then for a shorter period,
Okay.
I'm not expecting it to squeeze up, but at the same time, because it's been a very balanced, and it has the number of 8.5 million volume, and P ratio is 9.26. So P ratio is still healthy, and dividend growth is 3% annualized is good. So I'm still looking at as a as a positive indicator. Yes. So this, let's see what the news is here. Earnings. Yes, that's okay. From the technical standpoint, their outstanding shares, RSI. This is good. Short floaters. Okay, hardly any short flare. This is going to be regular trading. So I don't think the stock to just squeeze like anything, but it's a positive business, a turnaround story, and everything else looks good from the fundamental side. Yeah, I think this is a buy, but look for some weakening, or if you already have it, hold it for a dividend and hold it for long term. Definitely.
Okay.
Yeah.
Okay.
The stock.
Next one is the SIM, SYM.
Okay. SYM.
Yep.
Okay. So SIM. Symbiotic. Okay, this stock is. I like the overall. Their annual cash flow is down. So again, I'm a little bit worried on their cash flow overall, and mostly because probably they're expanding, and it's a robotic warehouse automation. So
Yep.
I think I like the industry, but at this time they have to expand. They have to put the money, and we have challenges in that area because of the economy that we are currently living in. So
Mm-hmm.
I'm all I'm looking at is their who the another important factor is who's the um, where they are putting the money, how they are expanding. Are there any? Did they do recent most any acquisitions? Why there was a big cash down here? What was the reason? Did they have some type of something that they had to fix, or where this major cash flow out went, negative cash flow out? This year, as of now, I see like a minus 52, minus 150 million, and then we have hardly like some small change. So this, like, for year currently about 91 million plus minus about 92 plus 3, now about close to 90 million of negative, and that will still be on an annual basis. Last year it was 196 million. Here I'm looking at 2023 as of now is 92. It will become 90 maybe last quarter. Will give some more insight. So earning will be very important. I will just, for now, I'll just be on the side for SEM. I'll just be watching it a little bit more and see what's it's going. So yeah.
Next one is PATH, PATH.
PATH already had good run. PATH was in our tips also. 1 second.
It was? Okay.
Was, yeah. So we had PATH earning was great, and that's what the cause of maybe a short squeeze as well. So last earning was great. We had yeah. I'll be buying PATH cautiously around, like, I am a by heart, I'm a value person. I like to talk about growth, but those are all the growth things are happening through options, because that's an industry where I don't want to burn myself. I have seen cases where stocks have hurt badly if on a wronger valuation entrance. So for that reason, I would say PATH is good buy, but on some level of weakness. 22. Yeah. So again, I'm looking at the yeah. So this 1, 2, 3. Yeah. Again, so the reason PATH jumped up because they shortened their deficit quite a lot.
Yeah.
And the income from operations have really, like, 2 times. So that's, for any company, this is the most important factor. How much is the cash flow? This is exactly the reason why Tesla had such a big rip up at that particular time, from being non-profitable to being break-even and profitable. So for now, I think PATH is good. It already did a part of it. For now, I'll just say watch it. Good company, but yeah, for now, especially any company which is a part of S&P 500. I don't know whether PATH is part of it or any of the major indexes. No matter how the company is doing, if the index does not perform, then that can hurt. So I have to check if its PATH is part of S&P, but if it's, and still even in S&P, there may be a rotation cycle. So good possibility of that. So again, I feel PATH is good buy. Just wait a little bit more.
Yeah. Yeah. The next one I have is Oxy.
Oxy, I'm going to avoid, and I know the trend of the market. I know that personally. Let's see.
Why is Warren Buffett invested in it?
Many times Buffett takes a put just up. He has made a lot of money out of Oxy. Okay, so he entered in Oxy when it was $8 or $7 to $8. He rode it all the way up. And Buffett has been known for reducing size, and you will know after 2 months or 3 months, or otherwise what he does is he always creates a hedging position many times, which he doesn't talk about. We know that he has a lot of cash sitting, but that cash is working, and not a cash in a bank account or something which is just sitting like that. So when Buffett says he's sitting on, I would also see how much cash he's sitting on. He's sitting on the maximum amount of cash.
A lot of cash right now. Yeah.
No. So for that reason, yeah, for him, he has way past his break even. He's like almost 8 to 10 times profitability in case of Oxy. Yeah. So if he says um unless Oxy is doing something on the to diversify, I will be very watchful. Not a buyer, not a seller, but again, the income is about 13 billion. Is from being a distressed company now. It's like the revenue is about 16 billion. Operating expense have reduced, so which is good. So overall, company wise, everything looks great, but it just something. Okay, so one thing, annual is 2022. This quarterly is the cash flow. Why the cash flow is still uh, okay? Asset base. Okay, for it could be that Buffett is, and one more important factor that we have to understand: the control of Buffett overall. Like, see, Charlie Munger, Buffett, they are part of older 401, older Buffett. If you see these days,
Hmm.
I'm not expecting Buffett to be making key decisions any longer. It's probably the Berkshire Hathaway 2.0 has to come soon.
Yeah.
So for that reason also, if he's sitting on cash, good. But I will go with the trend. Oil
Okay.
has gone below $70.
Right.
Unless
It keep going down.
there's another war or something that starts up and pushes oil up further. I will be out of a stock where the industry is not supporting as of now.
Okay. One last one, AI.
AI is good. Yeah, it's a AI. Definitely, we have seen through AI. It's a company which provides. Yeah, currently AI evaluation um, is building up, and the momentum is there. This is going to happen. Right now, let's see the technicals for AI.
What's a good entry point? This one I'm really interested because of,
Yeah,
I'm trying to identify AI stocks in general. This happens to have the label AI, but all AI stocks I'm looking at.
sure. So performance last week negative, month positive. Okay. Okay. The one thing I'm concerned why this is such a high short float. This may be a little bit. So there's good chance of short squeeze happening here in this stock. And from the technical standpoint, this is at a point where it need to test near 26. I think
Hmm.
all the time we are looking some level of support here near 22 to 26 range. So I'll be buyer of AI in this range. And earning standpoint, there's a gap down. I like to understand why there was a gap down. And second thing, this is okay. This big jump gap down is okay. I mean, probably the stress is time. Maybe some of the institutions are buying here, so we will see. Let's see what we have here is the gross margin has gone up. Okay, so I like AI as a subject, like this area, and the price point looks great. I'm still not sold on where the expansion is happening, but I think I like it. Price point anywhere between 24 to 26 is a good entry point. We can definitely initiate our investment in this particular stock. It not too long ago this was much lower. So, and it's kind of also because see, this was a stock close to 25, and then there's a jump. It's testing near 28, and then there's a resistance point of a trend line resistance. So it's an area of test for now, but I think it's a good buy to start.
Yeah, I need to drop, but what about desktop metal? If we can look at that,
Desktop,
please.
my long-term hurting stock position.
Mine as well.
Yeah. So Again, the reason I like Desktop Metal is a possibility of a good squeeze, and it's at a point where, one second. See, I'm positive, and especially the Republicans looking at more of less China, more of so if Republicans come to the power, whoever comes, at that time I'm looking, see, 34%, and minus 30%. If this short float just turns up, the stock may go 5 and above in a span of a week. We don't know when, but this is from the risk standpoint as an investor. All I'm looking at the price point right now is too good to be true. Okay, and the next thing is let's see.
When you say short float lower, what does that mean? Explain in simple terms.
Short float means how many stocks are being shorted. So people have been shorting Desktop Metal for a good reason. Another thing we have to understand is in US market, there is a good influence of Chinese investors. Okay, they would do anything and Desktop Metal, the main area of business is where they are expanding and more like make more stuff in America. So that's the goal. The 3D printing is getting into attraction and all. So that is one area I think I always put my money where I think America will want to be next 5 to 10 years. Like AI was one of those, and I'm expecting more of a. So for that reason, I'm taking a bet that this stock will have a squeeze sometime, and the odds are already passed. So we just have to hold and maybe add on. So yeah, no, there is hardly any reason to go through the fundamentals because fundamentals won't be mattering at this point here. So what we are going to see is when the squeeze comes, whenever it crosses about 1.2. And another thing is I was looking at the insider buys. So this company had insider buys, and also there's a heavy institutions percentage in this. So some point, option standpoint, option market is all the way open to 2026. So I'm expecting this company to turn around. Whenever it happens, there will be good squeeze up. Yep. Yeah, for that reason, I like this. But again, it's a high risk, high reward, but I have made most of my money, let me put that way, by taking some positions like this. But again, this is me. Okay.
Thank you.
Now, any other stocks, Subodh?
I wanted to look at my. Okay, go ahead. Somebody else is there.
No, that's it. I think I'll drop Avi, but I think we'll connect later. Thank you for your help.
Even I will. Yeah, we will stop. Market is going to open in next. Anything else, Raviji?
Yeah, only thing I was going to ask is my lovely GE, which I'm trying to.
Let's do GE tomorrow. Let's do GE tomorrow. Okay. Or quickly, let me do it. GE. Okay. Let's do that. So as said, chart wise, GE is great. Hold on. It pays. I think it is GE time right now. So I think overall. Yeah, good part is GE is also is still part of Dow Jones, right?
Yes. No. Yes. Yes, it is. Yes.
Yeah. So I really like GE from negative performance all the way looking. This is okay. Part minus reason there was some weakness. 2021 is here. I think GE is good to hold.
2Q they spin off. 2Q they spin off power.
Okay, so spin-off is good. The reason is better cash management, better management, less of red tape. So I like spin-offs and especially from a company which has already been like, so IBM spin-off, GE spin-off. I really appreciate that because and then how the new management comes and evolves according to the market situation. That is all positive. So definitely. Okay, so all right, thank you, and let's touch base.
Thanks, Avi.
Yeah. Thank you. Thank you, sir. Thank you, everyone. Thank you for joining. Please subscribe to our channel. I'm looking for a little bit more subscription. So I think I'll request everyone to please subscribe and like our videos if you like it. Okay. Thank you.
Thank you. Bye.